and up to the end of 2020. That gives us an indication of how far, depending on data, the South African Reserve Bank can reduce interest rates, but that will only put it at around 3.25%. I've also seen a question, Governor, asking which of the sectors that we believe need to be supported to boost economic growth. I know I have the Honorable Minister in the House who is working on some of the strategies from the government side. I don't know whether the Honorable Minister will honor us maybe and respond to that question. Governor, there is another one, Governor, for you, and how you are, what you are doing to decrease the usage of cash, especially during COVID-19. I think that one we can take jointly with the others that were asked by the CEO of Business Eswatini. Thank you, Governor.
Thank you, Skombozo. Thank you, Nat, for your comments. Let me admit from the onset that I missed the first question as you were asking it. My program director was also getting my attention, so I hope somebody will cover it. And I will also implore on my assistant governor to talk about the issue of Basel IV that you are saying we should be there, and probably they will reflect to you even the most developed countries where they are on this one. We are not an outlier per se. And I appreciate your comments where you're saying you are watching. We were reflecting and pointing out the steps that we have taken just to ensure that the commercial banks have the necessary liquidity to be able to lend, to be able to cushion those that are affected by COVID. And the best that we are doing is keep on encouraging them. Don't just go for foreclosure. Engage holiday payments, rescheduling of loans. We know they do that responsibly because they also look at your own track record as a customer, whether they can work with you in that sense. They also want to be able to say, indeed, you are not doing well because of COVID-19. They want to be sure they look into that. That's what we are also monitoring ourselves. That's why we are saying when the prime rate is reduced, we expect, when we reduce the interest rates as the regulator, we expect the prime rate to be reduced. The banks are also expected to, and they do that, publish what they are looking at. If your loan agreement with them has a link to the prime rate, it will reflect. But if it has no link, then it's a question of negotiation. So our intention, as you say, is really to cushion the customers. And we continue to appeal moral suasion and also engage closely with the commercial banks to say they must show this to be benefiting their customers. Indeed, when we are talking about credit going down despite interest rates having gone down themselves, it's also another dynamic that we're also curious to understand what is actually happening. Are we running short of viable projects? What is actually happening there? The issue of capital flight, it is there. Sometimes it requires a lot of things to tackle that. It's not like the banks just want to take the money out of the country. In a lot of cases, yes, that also does happen, but in a lot of cases, the banks will ask for Forex, including the rand, because their customers, yourselves, want that Forex. You want to buy from outside the country. You want rents to go and buy from outside the country. You do a lot of things. I always marvel when I think back how sitting at the bank we were able and could tell you when the country received Dula, we saw it. Literally, we could tell you that this is the money that is now enriching that city in South Africa. This is the one that is helping this one develop and increase. So it is not the banks that take the money out in a lot of cases. It is us as their customers that demand this money and use it outside. So we are making attempts as a central bank on how to contain. If we contain their money in our call accounts or at the bank, it is because when they take it out, even if they are keeping it as a malangeni in the central bank, when they want to take it out, then they will erode our reserves because they'll have to convert it to rent, they'll have to convert it to something else as well. So we would like to keep our reserves at least at 4 months of import cover. So when we are talking 3 or even 3 months or 3.5 months, yes, it is there. Our wish is to keep even much more. I think we would feel more comfortable in that sense. AG, I'm not sure whether you would be in a position to talk to the issue of Basel. And whilst you yeah. Let me leave it with you if you're in a position to do that. And then maybe I'll ask Pilile, right behind me, to talk to the issue of efforts to digitize the economy. I think that a combination of my colleagues will be able to answer that question as well.
Thank you, Governor. I think the question that you missed, maybe if I can start with that one, with your permission, Governor. It was on the credit rating for the country. I can confirm, Governor, that Moody's issued a report on the 8th of June 2020 confirming the country's credit rating at B2 negative, which has not changed from the original rating that we had been assigned when we started the exercise. Of course, there are certain indicators that are weakening, especially you'll recall that previously our debt ratios were quite a strength. From this report, it indicates that that strength is being eroded as we continue to accumulate debt. Of course, B2 negative is below that of South Africa. So I take it that we are in the same boat. In terms of Basel, yes, indeed, I must indicate that there are talks of Basel IV, but the Basel Committee on Bank Supervision is taking the position of saying, look, we've developed enough standards and guidelines, and perhaps the focus should be on effectiveness in terms of implementing those standards. We will know that for quite some time, especially subsequent to the global financial crisis of 2008, Basel III came into effect, and a lot of economies migrated to Basel III. I think as a kingdom, we've been on Basel I for a long time, until recently we moved and adopted Basel II, but we have taken certain elements of Basel III to incorporate in the migration. So it's sort of a hybrid of Basel II and Basel III that we have moved into. I think for us, the focus is to say that we don't believe that the financial system is that complicated or sophisticated in the kingdom to warrant us to move towards the higher levels of the Basel. It is quite costly, and it demands a lot of resources from the players to comply with these regulatory standards. So we want to move with the global economy, but also apply things that are relevant for the economy that we are operating in. I think those are the comments, Governor, that I can make. Of course, I can pass to GM Finance and GM Operations to deal with the issues of digitalization and the relaxations that we have put for mobile money transactions. Thank you.
Thank you, Governor. If I may, I will take the question that speaks to what are we doing in terms of decreasing the usage of cash in Eswatini. Maybe it's just to state that as part of your statement, you did mention that we are increasing limits in terms of wallet sizes. These are bank-led and mobile money transactions. This is all aimed at encouraging people to use the digital platforms as opposed to hard cash. And I think most importantly, which is forward-looking, is the National Payment Switch Project, which will, amongst others, enable interoperability within industry players, and it will also enable faster retail payments. So we're not just looking at this initiative in the short term, but we're saying what can we do for the medium to long term. And maybe GM Finance can speak to the digitization aspect.
Thank you very much. So what GM Ops has outlined in terms of the payment switch project, I think that's about getting the infrastructure right. But together with this, there needs to also be some sort of regulatory reform around what are the rules of play when we talk about digitization. So the central bank has done two things, or is in the process of doing two things to address that. The first one being, yes, there are some legislative reforms that are aimed particularly at providing regulatory clarity around what digital products and services ought to look like, how they should behave, and so on in the industry. And then secondly, in realization of the fact that those legislative reforms might take a slightly longer time to come in, the central bank has launched the regulatory sandbox. The governor did mention that this was launched in February of 2019, and the objective of the sandbox is to say if there is innovation currently that is ready to deploy into the market, the central bank and its partners are willing to look at a more relaxed regulatory requirement in order to allow those products to go to market. Of course, the central bank, being who we are, we don't let go of our primary mandate to ensure that these are deployed in a safe and efficient manner. We don't compromise financial stability and so on. So if you have an innovative product or service that fits the requirements of the sandbox, there is an opportunity to actually test and deploy under a lower regulatory requirement, of course making sure that we do not compromise the financial stability and safety and efficiency of payment systems on the overall. So those are the two things that I can talk about from the perspective of enabling digital payments in the country.
Thank you very much, GM. And I think the last question that we have is on the sectors, which I will implore the Honourable Minister maybe to just give us a comment from the government side. Honourable Minister.
Okay, if I can, number one, I just want to make a few comments just to first of all commend the central bank. I think that what they've done with the reserves has not been, from the government's point of view, it's not more money that's been added from our side. In fact, the government almost a year and a half ago actually took a drawdown from the central bank, which had a negative impact on the reserves. The bank has really done well to be able to make sure that whatever trade balance benefit this country is having, they are now starting to capture in the central bank, which wasn't happening as well before. So just commend central bank for that. Thanks for that work. It is definitely helping the base of our economy to remain stable. Secondly, I'd like to maybe speak about the quick wins. Was a question that came up on Slido, so I'll just touch on that, which the country is looking at. At the moment, we do have the strategic roadmap, which we have set up, which we are continuing to try to push all the measures of the strategic roadmap. But at the same time, with what's happened in COVID, we're coming up with another set of, it's almost like a set of accelerators to be able to take this. So it's very much the roadmap. It's not deviating from the strategic roadmap that we have, but it's a group of accelerators. It's, as you would have seen in the newspapers, there's been a call even to all the private sector in the country to say, what can the private sector bring to the table that we can actually do post-COVID, especially in the next 18 months, to just boost the economy and take the economy, accelerate the growth in the economy, and what can government do to be able to be party to that. The government also stepping up to the plate, coming up with some measures. That'll be ready in a few weeks' time to start announcing. It is still with Cabinet and is going through the final stages. And the private sector has been brilliant and really come to the party, and we're very proud of the way government and private sector are starting to work closer and closer together in this time of crisis. A crisis has got terrible aspects to it, but it can also sometimes bring out the best of people, and that is a wonderful aspect of something which I'm just seeing happening within Eswatini, and I'm very glad to be noticing that, and I believe it can have a very positive impact on Eswatini's economy post-COVID when we come out of that. Otherwise, maybe just to touch on the banks, at the moment, there has been, I think Central Bank has done all that they can to try to allow the banks to be able to support the COVID crisis. The banks have also come out with advertisements, even as a banking association, they've come out with advertisements saying that they are there. Please come and see them when it comes, if there's an element of your business under distress, you have a healthy business, but it's under certain cash flow distress, let's look at 3-month payment holidays, let's look at credit extension. That has definitely been announced. So just letting Business Eswatini know if they do find that their clients are saying, that they have all that, it's their role also to step up. They have a platform which they can speak from. They can engage with the bank association, engage with the banks directly themselves, and really make sure that if there are elements of the one hand not knowing what the other hand is doing, to close that gap. We're a unit in this country, and I think we all need to work together to make sure that there aren't these gaps which companies somehow possibly fall between the cracks and get affected by it. But Program Director, was there something else? Am I missing something? You mentioned I must speak to something now. Was there something else you'd like me to touch on? Did I get the request that you were making?
Yes.
I covered that. Okay.
Yes.
No, thank you very much, Program Director. Thank you.
Yes. Thank you very much, Honourable Minister. In the interest of time, I think I have more than 1 minute. I can see a question from Babe Mabuza and also the Bankers Association. Can I start with Babe Mabuza and then I come to Babe Kel?
Thank you, Program Director. I'll take less minute because other comments and questions has been already covered by the other speakers. Program Director, we appreciate irrespective that the governor did not specifically touch SMEs, but because SMEs has a big role that they are playing in the economy. But we have captured some very good responses from his presentation, like the increasing of limits on this daily transaction that is done by SMEs. We thank you very much, Program Director, the response from Central Bank and in this regard. However, we will request, Program Director, because of this limit that has been extended, some of the limits are monthly, not daily. The monthly now at this time they need a lot of transaction that is taking place when you are doing business, especially in the SME space. How this thing affect us? If it is daily, Governor, we will appreciate it. We know that you want to control risk, but daily will make the SME space sector operate effectively, because this affects mostly For an example, we are dealing with products and services that you have to pay on a monthly basis. But if I've got a limit of 15,000, that 15,000 tells me that I have to pay monthly. My limit is monthly. My daily limit, I get affected, especially when I get promotion items that I had to procure. And even if I procure, I get a business today, then I tell the person that I'll pay you tomorrow, because we are trying to run away of cash, and we are trying to run away paying by check, because they have got challenges itself, and we want to digitalize and use the technology. We request the governor to look at that point. If it is not addressed, which I did not capture clear on this part of the limits, and daily is the best one. Secondly, we appreciate the bank relaxation in terms of all products, loan, bonds, and everything, and the fees that they had to, I think, relinquished. And thank you to the Minister. Esra did mention that we had to do away with penalties for our period of COVID-19 and even the interest, and we are giving to pay the capital amount that we have to pay. Lastly, the issue of SACU. When you look at the budget of billions that is on the capital project, our understanding is to say when you spend that money, and that money must bring back money. And I don't know how, I didn't capture to the presentation of governor the advice to government how to regulate, because it seems most of the time that expenditure is not within SACU member states, so that we benefit on the revenue that comes from SACU, but it's outside SACU member state, mainly on the other under sectors like BRICS and etc., which we are not benefiting as a country. I think, how do you regulate that? Because big projects are taking place in the country. When you look at that, big spending is outside this SACU member state in terms of their procurement. And hence, I think that's the effect we have in the SACU. I don't know whether I understood it very well, but the minister will correct me if my understanding is not very correct on those things, with the effect of buying outside the SACU member states that contribute to our, which I assume we should be benefiting more. And by benefiting more, we are going also going to benefit on the project and the investment that the government is going to be doing in this country. Thank you.
Thank you very much, Mr. Mabuza. Babelokele.
Thank you, Program Director. Mine is not to answer for the central bank or to pose any position specific, but I would like to comment on some of the issues that have been raised so far. From the banking perspective, we know that the situation as it is at the moment is such that not only the other businesses are struggling, but also the banks are struggling. So people sometimes think that the banks have all the solutions, but really we don't have. We're all in the same boat, and we all should recognize that we all battle in this situation. We all know that even where we are at the moment, even pre-COVID, the economy has been struggling. I think we will all have noted that the governor did say that NPLs, which non-performing loans, increased by as much as 9.3% in December 2019, which shows that there's been some issues even before we got this far. We know that the central bank has taken the step to reduce some of the requirements so that we can lend some more, which we are obviously trying to do, and we are grateful for the measure that the central bank has taken. Unfortunately, the situation as we stand at the moment is such that it's not just a phenomenon in Swaziland, it's all over the world that economies are in lockdown. Even though interest rates have been declining, but lending to businesses has not been possible because either they're in lockdown or maybe the economies are distressed. So that is a phenomenon. It's going to take some time before, as economies open up, before the benefits of the lower interest rates can be realized. Probably at the moment you can look at the lower interest rate as more of a relief to businesses and individuals. That's what it's doing more than at the moment than encouraging lending until the economies come out of lockdowns. I think that will be the perspective from the interest rates. But we also know that maybe if I could comment on what the executive director from Business Eswatini said, that credit has been going down. It has been going down. I think that's because of the economic conditions which we have had for some time. That's my comment in far as banking is concerned. But I think the important thing is to realize that banks as well are struggling, and we do have the increase in NPLs. As the increase takes place, it calls for banks to be more careful and circumspect in terms of granting loans. So we have to take those precautions rather than say because there's more people. Sometimes you may lend, but you are lending to businesses in distress rather than businesses that are growing or that are going to be able to repay. I think the minister mentioned the fact that as banks we have opened up to businesses to come in and seek COVID holidays, as we call them. That is still the position, and we are prepared as banks to accept those requests for adjustment. But as we all know, this is not necessarily adding to credit extension. It's probably sometimes recycling or restructuring the same loans that are already there on the table. But as the minister had mentioned, we are also careful in that regard because post-COVID, some businesses will survive, some businesses may not survive. So we have to take those precautions. Thank you very much.
Thank you very much. And final comments, Governor, Honorable Minister.
Maybe just to respond to Mabuza's question around SACU and the SACU receipts and what's going on there, if I may. If I can maybe just, I think the problem is that there's sometimes a misunderstanding of exactly how SACU works. And to explain it will take a long time to explain all the aspects, but let me just explain the two macros in SACU, just how the relationships work. So number one is, how does the money come into SACU? Where does what you call the SACU pool come from? There's a few elements, but the main element, it's from imports into the SACU region, which get levied or get special customs duties to them. So an example is we buy a Ford car from America. When it comes into SACU, there's a 40% levy on that car. That 40% gets taken, it gets put into the SACU pool. So that's how the SACU pool gets generated. It's from import. Now, the car might come to Eswatini, might come to South Africa, might come to Lesotho, Namibia, Botswana, but at the same time, the money goes into the pool regardless of where it goes to. Now, the next element is, how does the money get shared that's in the pool? So now at the end of the year, you got a big pool of cash, 120 billion emalangeni. How does the money get shared between the member states? The money gets shared based on inter-SACU country transactions that take place. So the more that Eswatini imports from neighboring SACU countries adds to the percentage of the pool that we benefit from. So which means the more we can import from SACU instead of outside of SACU. So if you are buying building materials in Eswatini, for instance, and you are buying your building materials from mainland China, that adds nothing to our percentage that we're going to gain from the SACU pool. If we buy from South Africa, which we do a lot of, and you're looking at construction sites, for instance, if the construction site is buying a lot of its raw material from South Africa, for instance, that means it's now calculated in the percentage that Eswatini has imported from its neighboring states. So if we import from Botswana, Lesotho, South Africa, Namibia, all of that grows the percentage that we benefit from the pool. Now, Eswatini used to get a higher percentage. Our percentage of the pool has been growing, by the way, over the period of time, but Eswatini's percentage has been coming down. And a lot of that's also got to do with the fact that we now have got grey imports, for instance. We have grey imports coming now no longer from, our second-hand cars always used to come from South Africa or neighboring countries. They're now mainly coming from abroad. We are we're getting our in-transit methods right. That's reducing. Fuel, which always used to come all from South Africa, is now coming also from Mozambique. So there's a lot of these elements that are actually reducing the amount of the percent that we get from the pool. And that has got the impact. So just to give you a quick broad, now there's a lot of smaller elements to it, which I'm not explaining now, but those are the broad elements to give everyone understanding. And until I came into the position I am now, I also didn't understand it perfectly myself, because it's a bit intricate. But it's very different how the pool is created and how the pool is shared. And one has to keep those in mind when one actually gets to understand it better. So, but the bottom line is, let us say there's a big construction site. A lot of the imports are coming from SA. It's actually growing the percentage of our revenue sharing formula that we are currently using in the SACU transaction. Thank you. I think just to give a quick perspective on how SACU, on how the deal actually works, so people understand it.
Thank you very much, Honourable Minister. I don't know whether the Governor has final thoughts.
Thank you, Program Director. I just want to appreciate the comments made by the Minister. It's very important for us to understand how the pool is constituted, and I think he has ably pointed that out, and how it is actually shared. I know that the Minister has been trying to educate all of us, even to the point of emphasizing, with also the assistance of the Commissioner General, how important it is to declare when you bring things at the border, because that helps towards improving our share of the pool, knowing what we've purchased from other SACU countries. It's very important. We were looking at some figures at some stage at the bank, Honourable Minister, and saying, okay, our trade figures with South Africa, we seem to be importing relatively less. You're looking at 75% and you're down to 71%, and then we say, our research team, can you just check where we're now sourcing certain things if our import figures are coming down? Lo and behold, you're seeing figures from non-SACU countries, a significant increase of what Eswatini are importing from China. That will not assist us in our share. We might charge the customs duties, it will augment the pool, but when it comes to the actual share that we are getting as Eswatini, that does not count towards improving our share in that sense. So it's very important. And finally, I'd like to appeal, to all, particularly Honourable Minister, to your colleagues. I know COVID-19 found us as Eswatini at a time when we were concerned about our economy. We want to improve on our economy, and COVID-19 comes to make things worse. I know you had already had plans in mind, but you need the buy-in. My appeal is that you be allowed, as government, particularly as Minister for Finance and with your colleague at Planning, to come to us with those strategies that will revive this economy. We need that. There are areas where we did not want to even venture. My colleague who always assisted me when I didn't understand things, the Commissioner General, would say to me, don't let the crisis go to waste. There are things that we need to do now to improve our economy. They will be bitter in some corners, but we need to do them now. We can't find any other opportunity than to try and do it and revive the economy at this particular stage. I know Nati was saying I'm the bearer of the bad news this morning. Maybe I am, but we needed just to tell things as they are, and also express that hope. I'm always reminded of a country that says, no, if you want good news, don't test people for COVID. Then nobody will know how many are positive. That's good news. I don't think for us it's good news that way. That kind of ignorance is not good news for us. We need to be talking to these issues in order to improve on them. Thank you.
Thank you very much, Governor. Thank you very much, our distinguished guests.
On your way out, please do get a copy of the Governor's annual monetary policy statement. What you heard today is an abridged version. For those of us who are viewing either online through live stream, you can have a copy of this statement from the Central Bank website. At this point, can I invite the Babe Masilela to make our closing remarks? Babe Masilela.
Thank you, Program Director. I have a whole long list of salutations, which are filling up a whole page, and they will take me 5 minutes to go through. So please allow me to say all protocol observed. Let me greet you all in the name of growth promoting monetary policy. We are in uncharted territory, clearly, and the COVID-19 pandemic has indeed put negative pressure on the economy of the Kingdom of Eswatini and, of course, the world at large. Unfortunately, as it is unprecedented, it calls for swift responses from the entities responsible for economic management, including the Central Bank of Eswatini, which, of course, which had to look to monetary policy, which is the key lever of economic management under its control. As reported by the Governor, the Central Bank of Eswatini responded by adopting an accommodative monetary policy stance. This action by the Central Bank reminded me of a story that I was told by a former classmate of mine at university back in the day. He was chatting up a lady, as boys normally do, who turned up with a very interesting justification for why she couldn't go out with him. The first question that she asked this gentleman was what he was training up to be. And the fellow proudly proclaimed that he was training up to be an economist. Upon which the lady responded by saying, "Oh, sorry, my friend, I could never date someone like you." The gentleman was shocked and asked, "What on earth would my profession have to do with a relationship?" And the lady responded by saying, "It is very well known that with you guys, if one gets depressed, you respond by lowering your rate of interest, and it could easily get to 0. So, now I'm looking at the central bank's response to the depressed economy, and I'm beginning to believe that this notion may be true. Ladies and gentlemen, it is, however, clear, as mentioned already by a few speakers here, that the central bank's actions are insufficient on their own to revive the economy. There needs to be a strong and very well coordinated effort between the state institutions on the one hand, led by the government, and of course the central bank, and the private sector on the other hand. And I will venture, in spite of what Mr. Lukele has said, to indicate that these, on the private sector side, these must be led by the financial institutions as they support private businesses. That collaboration will clearly become very, very important. Of course, the other key stakeholder in this drive will be the general public, which is essential in bringing the economy back to life. The long and short of this story is that we all need to be very creative and in some cases very brave to explore what may seem to be unconventional methods to revive our economy. We are therefore encouraged by the leadership that the government is providing in this regard. under such very difficult conditions. It is not lost to us that this crisis found us already in need of major adjustment, which makes the government's task twice as hard as it should be, or as it is in other economies where the situation was not as dire. Such leadership, as they are demonstrating, gives us hope that Eswatini will indeed conquer this pandemic and come out stronger than before it hit us. I would also like to take this opportunity to appreciate all individuals and institutions who have joined the fight against COVID-19 through their generous donations to the COVID-19 response initiatives in the country. These will go a long way towards minimizing the adverse impact on our people, which is threatened by this pandemic, hopefully until the whole economy is fully open and bounces back. On behalf of the Central Bank of Eswatini, may I once again thank all of you for braving the cold this morning to attend this session and engage in the way that you have. Let me also thank all those that have joined this session via the various electronic platforms that were provided. I congratulate you for embracing what seems to be our new normal in an effort to ensure that business continues while we adhere to the principles of social distancing in order to curb the spread of the virus. I have not been apprised, and I'm not sure whether it is possible to be apprised of the numbers of people that will have connected in this fashion. But I'm sure they will be impressive. If indeed they are, this will be proof to me that the central bank has succeeded in its efforts to demystify its mandate to the point where people are eager to hear what the governor has to say in his annual statement, because this can be a very dry subject. I have to say, though, distinguished ladies and gentlemen, that I will not be too unhappy should I find that the numbers were not as high as one would like to see them. To me, this will be a sign that our economy is still very healthy. I personally lived in an economy which was in crisis, and I noted one interesting phenomenon. There, the governor's policy statement became far much more important than the minister's budget speech. And the main reason for this phenomenon was that government policy was now dictated by how the country's limited resources were being allocated, to which the central bank was pivotal as the custodian of foreign exchange. Now, we don't want to get to a situation like that as a country. I'd like to conclude by thanking the governor for his very clear and engaging presentation. He presents these as only he can do it, with the necessary professionalism required for someone looking after such a critical aspect of our economy, our money. Let me proceed and thank the central bank management, staff, and our other partners for organizing this event and bringing it to life by following the set guidelines and restrictions established by government for the protection of the nation. Your efforts are greatly appreciated. Once again, ladies and gentlemen, may I take this opportunity on behalf of the board of the Central Bank of Eswatini, the Monetary Policy Consultative Committee, management and staff of the bank, to thank you all for your participation in the governor's annual monetary policy statement. I thank you all, and may God bless us all. Thank you.
Thank you. Thank you, CG, for that. Thank you very much, colleagues, distinguished guests. Just to remind you, always sanitize, wear your mask properly.
monetary policy statement that the governor delivered a couple of minutes ago, maybe let's say an hour. I did say that in the studio I have with me the Central Bank Deputy Governor, that's Felicia Dlamini. She's in the company of the Managing Finance, GM Finance Markets. It's Malvin Homo. Yeah. Okay. First of all, let's say the monetary policy statement. Let's deliver a governor. We would start challenging. We would say, "Vele si itaunela yini si sotfa." Ukuthi sifukule lo mnotho wale live sibuyele esimeni lese sinconywana noma khona letinye izinto kumbe lesiyafuna etendeke njengoba ukhulumisile bo discount rate kwekuthi siyehlisile emahlandla ukuze abantu batokhona ukuthi bafinyelele emalini lula izinto kumbe letiyawukhona kufula nemnotho.
Thank you so much for the question. I think the governor in his statement mentioned that monetary policy alone is not enough. The central bank's reaction has helped mitigate the effects of COVID in the short term. Going forward, medium to long term, other policies have to come into play, including the fiscal policy, which in the short term have been complementary with what central bank has done. But going forward, fiscal policy and other structural policies, including labor policies, have to kick in to try and help lift the economy. A pivotal action that the Kingdom of Eswatini and the government of His Majesty is doing is to try and put together a recovery package. So that recovery package is all-encompassing. It is looking at how we revitalize the private sector and how we protect lives and how we support the labor.
So it's not just things that have to do with money that should be done, but we are also talking about regulation, for instance. The ease of doing business is one of the things that we've been talking about for a very long time. Now, in terms of the legislation list that we have in place, is it robust enough to sort of sustain this economy and sort of get it to a point where it can recover, or there are gaps that need to be dealt with?
Yeah, well, thanks for that question, but it's a little bit difficult. But I think, as the DG said, what you would see, especially from the government's strategic recovery roadmap, they have actually identified some gaps in certain pieces of legislation, because if you look at the plan holistically, what would need to happen is a shift from maybe having government being a significant player in the economy, and you transfer that into the private sector, so that it actually becomes simple for business to actually invest, and then they employ people, and then it actually fits into economic activity. I think one key area is the ease of doing business. If that can actually be addressed, because it has got specific elements. Make an example, I think. How quickly can one actually register a business? I mean, if you actually improve the legislation which actually accompanies those things, it does have, I think, the potential to have long-term positive impact on the economy.
Yeah. I think another point maybe that, I mean, you made mention of earlier on before while we were listening to the governor deliver his address, was the issue of even the structural policies that deal with the infrastructure that we have in the country, because that also is important, and we now realize more than ever that infrastructure, especially when it comes to communication, is important.
Yes, I think part of the strategic recovery roadmap is to reprioritize our infrastructure spending and look at what is macro critical and what we can live without. And part of that is strengthening the infrastructure, the communication, the road infrastructure, our education and health infrastructure, so that when private sector steps up after we revisit the laws and we improve the ease of doing business, the infrastructure is already in place.
Okay, now obviously it's a very grim picture that the deputy governor or the governor has given us this morning, in as far as the performance of the economy for the year 2020. We're looking at initial projections were that we were going to see a growth of almost 3% or just over 2%, but now we are seeing a retraction of the economy, and we are talking figures in the region of 6 point something for 2020. Now, obviously, optimistically, we are hoping that globally the economy is going to grow by around about 6% in 2021, but those projections are based on the situation where COVID-19 is concerned getting better within the first half of 2020, so that when we get into the second half, things have gotten better. But the truth of the matter is we are in June already, and the numbers are scary. So when we look at COVID now and its impact on the economy, how long will we need to recover and get back to normalcy, considering that we are still trying to recover from the 2008 financial crisis?
Yeah. I'll take the first shot at this. I think COVID-19 is helping us reset, rethink some of the policies that we've been implementing. For a very small open economy, our biggest challenge is that we are vulnerable to external shocks. You mentioned the 2008 crisis, but if you will remember that immediately after the 2008 global financial crisis, we were then hit by a revenue shock from SACU in 2010, 2011. When we were still trying to get out of that, we were hit by the drought that affected, El Nino drought that affected the SADC region. When we were recovering from that, we were hit by the SACU shock that always comes with a lag after a regional crisis that affects trade. And we are in COVID. During this period, all these shocks have been depleting slowly our reserves. So COVID-19 finds us at a position where we don't have adequate reserves, and with normalcy will be informed by the way we use COVID-19 to try and reset the economy and rethink some of the policies. This includes, as Melvin was saying, leveling the playing field, making sure that the private sector plays a more significant role in the economy, so that government can broaden the tax base and get more taxes to invest in the infrastructure that COVID is highlighting as weak. So it's glim, but there's a silver lining if we use this crisis appropriately.
Okay, thank you very much. We will take a quick commercial break and then we'll be back soon to continue the discussion here. We are talking about the country's monetary policy statement, which was delivered by the Governor Majosi Sithole earlier today, and we have people from the Central Bank with us to discuss that. We'll be back soon.
COVID-19 is an infectious disease caused by a new coronavirus introduced to humans for the first time. It is spread from person to person, mainly through the droplets produced when an infected person speaks, coughs, or sneezes. These droplets can land in the mouths or noses of people who are nearby. These droplets are too heavy to travel far in the air. They only travel approximately 1 meter and quickly settle on surfaces. This is the reason person-to-person spread is happening mainly between close contacts. The exact time that the virus can survive on surfaces is not yet known. So it is wise to clean surfaces regularly, particularly in the vicinity of people infected with COVID-19. Hands touch many surfaces, which can be contaminated with the virus. You should therefore avoid touching your eyes, nose, or mouth, since contaminated hands can transfer the virus from the surface to yourself. When coughing or sneezing, cover your mouth and nose with the bend of your elbow or use a disposable tissue. If a tissue is used, discard it immediately into a closed bin. The most effective way to prevent the spread of the new coronavirus is to clean your hands frequently with an alcohol-based hand rub or soap and water. This will eliminate the virus if it is on your hands. Stay healthy and prevent the spread of COVID-19.
Pay your TV license quickly and easily with MTN Momo. Simply dial *007 *3 hash and select option 8 for TV license. Enter your national ID number as your reference and the amount you wish to pay. Then enter your PIN to confirm your payment. Once your payment has been made, you'll receive a confirmation SMS of your payment. If you're a first-time payer, you get another SMS for your TV license. So legalize your entertainment from the comfort of your home. Pay your TV license the easy and convenient way with MTN Momo.
Everywhere you go, MTN.
We are back in the studio, and basically njengoba bengishilo ukuthi sikhulumisa lapha I monetary policy statement lethulwe ngugovernor we Central Bank namhla ekuseni kukhulumisa nje simo ukuthi engabe live vele likhinyabete kanjani, kepha bekungabukwa nje live bekubukwa nemhlaba njengoba kwathi ukuthi inzaba ye COVID-19 ithinze umhlaba wonke, iminotho yonke imenzi kuma kwayenzike kusho ukuthi iminotho ibese seyathikabeteka kabi njengoba sishito ukuthi kubuka ukuthi umnotho welivela kangwane nje utawukwehla ngelizinga lelingetulu kwaloku sithupha ekhulwini, so sisikhuluma nga 6.something%. Studio ke manje sisaqhubeka sikhulumisa indzaba sisenaye Deputy Governor Lokungfelisha Dlamini Ganzi ubanye na Nzinisa lapha li designation yakhe le matima kuyifunza kahle kepha kuthiwa ngu-policy research and macroeconomic analysis.
That's right.
Singibambile Nzinisa. Okay, Dr. Patrick Nzinisa. Nzinisa kubuta nje ukuthi kuna kulebe kushito ngu-Deputy Governor la. One of the things that she was saying was that, you know what, the reason why we have it has taken us so long to get out or even recover from the 2008 financial crisis was the fact that there were other crises that then came up after this one, and throughout this time we've been using our reserves to sort of cushion the economy. Now with the COVID-19 situation, it finds us we do not even have MR reserves. We are now operating on a deficit. The question is, what should the lessons that we have learned in the past say to MR policymakers, those people who make these decisions, especially the fiscal decisions, Elif?
Yeah, thank you very much, listeners. I think as the DG has alluded to the point that we had previously some crisis that has affected us as a country. And my point would be to say that we need a more coordinated policy whereby the fiscal policy will also be in line with what the central bank is doing. Because as we talk about the reserves, on the other side, as a central bank, we are concerned about accumulating enough reserves so that we maintain that parity with the rand. And on the other side, if our government is spending so much, which will require the depletion of the reserves, so we won't be able to sort of like sustain that level of reserves that we want.
Mm. And then obviously our recovery is going to be longer. But then one would say, and maybe DG, you will speak to this one. One would say, in utilizing these reserves, government has been trying to revitalize the economy and get it going, because obviously we know that in this country, like you also said earlier on, you find that government is a major player. And if now government starts operating on a stringent budget, the economy is going to suffer as a result. But how do you balance between the two to say, you know what, you need to ensure that you have reserves, you need to ensure that you have a good budget that is somewhat lean in accordance with the situation, but at the same time, the economy relies on government's, fiscal activity or government's economic activity as well.
Yeah, okay, thank you. I think as we've been alluding to the developments or the different shocks that the country has experienced over the past decade, those shocks have led to where we are, where when we have an economic shock, the government has to step up. Every time we have an economic shock, government has to step up, such that it has now remained as government driving the economy. So what we are saying with COVID, and given the fact that even the steps that government has been climbing have been depleted, which is the fiscal buffers that government had that allowed government to step up, we now have to reset the economy. The GM Financial Markets mentioned that some of the policies that have to be looked at is how we encourage the private sector. So as government pulls back, the private sector has to step up. So it's that reset. If government were to pull out now, then the economy will plunder. But it is along the recovery strategy, as the private sector steps up, government has to pull back.
Okay.
So
it's not an immediate reset.
It's not an immediate reset. It is a slow reset, so that eventually government is creating an environment where the private sector, a conducive environment where private sector can thrive and drive the economy vis-a-vis the government trying to drive the economy.
Denisa, I think the next question is more about how important is it that we all take part in this economic recovery? Because oftentimes you find that in many people's minds, government is government and I'm an individual and I'm not a part of government. A government should sort everything out for me and I should sit and enjoy everything once everything's sorted. But there are, I suppose, things that we as individuals can do to stimulate the economy, and it does not necessarily have to be business people alone, even individuals.
Yeah. I think I will also reiterate what the governor has said in terms of saying that monetary policy alone cannot solve this problem. And of course, it needs everybody, stakeholders, government, business community as well. So, but individually, I'm not too sure whether there is a part that they can play, but we as policymakers, we can do something that will somehow translate into maybe improving the life of the individual.
So that the individual can also partake.
The individual. For example, the issue of reducing the interest rate. So we want that to trickle down to the individual, whereby they'll be in a position to acquire more loans so that they can be productive in their business arena.
Yeah, and it's the lowest it's ever been, the interest rate.
And maybe borrowing from what the manager, Dr. Anzalisa, has said, if the individuals have now access to cheaper financing, the starting point is to consume at home, so create that demand locally first. You mentioned during the break that we tend to be purchasing vehicles across the border, whereas we have car dealers locally. If we were to support our local suppliers, our local retailers, our local producers, that itself drives the demand and creates economic activity and will drive growth. I think as individuals, we owe it to ourselves to ensure that we first consume Swazi as a Maswati. We support each other, and then whatever we cannot get locally, we can
source
from outside. That's one. Two, if we do that, we protect our reserves as well, because whenever we import, we have to use our reserves to pay for those hard currency imports.
So it's like this would actually result in a double benefit for the country. First, the reserves are protected, and then beyond the reserves, we are also stimulating the economy. Now, let's talk about the reserves, because I think this is something, even during the question and answer session, immediately after the governor's speech, a lot of people had, an interest where their reserves are concerned, especially where the pegging of the rand is concerned as well. I think the president of the Eswatini, Business Eswatini, actually to a certain extent suggested that maybe we might want to reconsider the peg that we have with the South African rand, because, well, they've been classified under junk status now, and he's worried that they might be pulling us down with them. How would you respond to what the Business Eswatini president said, CEO said?
According to our analysis, I think we are better off with the peg, because we seem to import that stability from South Africa in terms of your inflation. So the lower the inflation, so it tricked to Eswatini as well. So, but I wouldn't say we should somehow break from the peg because of the benefits that we get from that parity. Yes, of course, the development that are happening in South Africa, they have an impact on our domestic currency as well because of that parity. So, but from where I'm sitting, I think we can still maintain that parity and benefit from those benefits that are accruing from that parity.
Etasha Petty, I would love for us to continue this discussion and really get into the benefits and maybe even the pros and cons of, but unfortunately we've run out of time, and hopefully you will make time for us some other times, a different platform maybe.
Yes, I think we have started a relationship, or we have rekindled our relationship, because I recall some time back you used to invite the central bank occasionally to come and talk to specific issues like the inflation or the exchange rate. So maybe going forward we could have those sessions again.
Good, coming from the top there, from the Deputy Governor of the Central Bank. Now, viewers, you will be made aware of what's going on, and we'll have a new segment created, I hope, for the central bank here. They can come talk to us about the economy, so that once you understand as an individual, you too can then partake. I'd like to take this opportunity to thank the guests that we had, as well as the team that has been working with us, the crew from here in the studio, as well as down at the Royal Villas where the monetary policy statement was delivered. Otherwise, for me, Xavier Kakama, have a great day. Bye.